Welcome back to episode number 17 of the Income Insights podcast. I'm your host, Denny Neidhardt, and alongside me, we got income founder Kimmo Rytkönen. Kimmo, it's been a while that we got together in the podcast, about 10 months to be more precise. How have you been doing in the meantime?
Pretty good. Hey, and thanks for having me once again. No, generally good. Started jujitsu, something new for a 47-year-old, but that's good stuff. So I had two things I wanted to do this year. One was to learn code, and the other to start something new. And I still don't know how to code, but jujitsu that's really awesome. Probably the best thing I have found in 20 years outside my wife. So in
That's a
that,
big
yeah. What else? Yeah, then I've been more active a little bit on LinkedIn and X. So just using the opportunity to say that if somebody wants to hear about my rambling on AI and fintech, then you can find me by my name on both platforms. So just follow. And other than that, we've been working on income, some new ideas, some new directions, and normal family life. I guess that's about sums the 10 months that I've been that we haven't spoken.
Quick follow-up question on my end. I saw in your social feed that you're quite active now with combat sports. Is it only Brazilian Jiu-Jitsu, or have you also tried other sports in that area?
Well, I did boxing for quite a long time and Muay Thai when I was younger, but essentially, yeah, those were a bit heavy on the back, on my lower back. So I thought I'll try Jiu-Jitsu. It's not still like, how would I say, maybe the best option for everyone's back or everybody with back problems, but I've managed to fix mine quite well with gym workouts and stuff. So it works. So at the moment, it's just Jiu-Jitsu.
Okay. Yeah, I would say you also look a lot leaner in the face compared to a couple months ago. So I feel like the sport is definitely showing also some health benefits on your end. So that's good to see. And if it also helps you to not put more stress on your back, then that's also good news.
Yeah, I think I've lost a few kilos on it. It's quite heavy, but it's good fun. So warmly recommended to anyone to try it. You might get hooked. So it's really cool.
All right. Today is obviously not just our first episode that we have since January this year, but it's also the first episode after quite a substantial summer break. I think the last podcast came out in June. Now we had an extensive summer break, so I feel like it's a good idea to discuss what's, so to say, probably the current big elephant in the room with Income Marketplace. You had the fundraising, which we're going to address then also towards the end of this podcast. But I think the main topic, probably, and the biggest concern for many investors is the loan supply. When we take a look at the overall picture, we see assets under management currently at 22.4 million euro. So that's pretty much the same level as it was in May. So how concerned are you looking at the overall picture about, let's say, the stagnation of growth or the growth stagnation in the previous months?
Well, yeah, you're right. We have been stuck at around 22, 23 million. So it kind of fluctuates closer to 23 and then drops back down to around 22. I mean, it's a very simple reason for it. It's basically Danarupiah, right? So as we've, I think, mentioned before, there were these APR cap limitations that were implemented in Indonesia, and we knew that Danarupiah will be dropping their portfolio. So in that sense, if we think that they've come down from around 8 million to less than 2 million by today, the other LOs have actually kind of taken that space. So that's the main reason for the status quo of 23, 22 million being held for such a long time. In terms of being worried, we know the reason. Not really. So I think it's good to see that the other LOs are picking up the slack that Danarupiah leaves on the table, and I think we will be growing with them, and then some new ones as well. But so yeah, it's a delay on our growth plans, but at least we know it. If it was, for example, investor appetite driven, that we couldn't just find more investors, then that would probably be a bigger problem to solve. But investors seem to like us, seem to like the other LOs as well. And yeah, I guess Danarupiah at some point stops dropping, and then the others will pick up the growth.
Mm. All right, so that's a wrap for this month's episode. No, just kidding. Yeah, obviously, I mean, we can go both ways when we talk about the supply issue. I wanted to address Danarupiah in particular because I feel like it's the most prominent and most dominant case that we can see on income, where the volume has significantly dropped, and as you mentioned, from 7 to 8 million now to less than 2 million portfolio on income. But maybe we can also address a couple of, or in general, a couple of lenders on income and just see like how they are currently performing, where do you see their potential? And then we can also make a shift towards, let's say, one of the newer lenders that have been added, and maybe also if you find difficulties in onboarding new lenders. So that would be my rough agenda for today's episode. Danarupiah, since you mentioned already, is the reduction of their portfolio really down to the new APR caps? Is that something to to work around in some way or form? Because once I was in Jakarta in March, they seemed quite confident to establish some new products and to benefit also from, let's say, smaller fishes being cut out from the market. How's their overall portfolio size developing, not just focused on income, but in general? Do you have an idea like how their business is affected from this as a whole and how they move forward, let's say from their perspective, but then also in terms of the collaboration with income and how their portfolio is maybe then hopefully growing at one point again in the future?
Yeah, so from our discussions with them, they are testing new products, and they are definitely not planning on going out or leaving the market. Testing new products obviously takes time, and I think usually in such cases when APR drops or APR cap comes into place, then the shift is to a little bit longer loans, because that drops the APR quite significantly. I think it's a simple one. When you have an APR cap dropping, you have certain score bands as well in lending, like meaning segments of customers that you can't anymore profitably service. And then that just means that you cut them off, right? So, if before you would have like 20% defaults in one segment, and with certain pricing, you could still make them to break even, or you could do it with a little bit of loss, and then to migrate the paying customers into repeat customers and make the profit at later loan cycles, then that's what you would do. But these cycles take time, and the same thing is testing new products. It takes time. So shortly put, I think their overall portfolio is dropping, but they're trying to find a working product. And from another point of view, we have a few Indonesian leads that we're talking to at the moment. They have similar ideas, similar topics, that they're also rebalancing their book and trying to find new longer term products. But nobody has said to us that they would be leaving the market or considering quitting because of this.
Quick comment on your personal forecast that you see with Danarupiah, let's say for the next 12 months. Do you see the portfolio continue to decrease? Will it stabilize around 2 million, or do you maybe see even
I
a good forecast for them for the foreseeable future?
I spoke with Lavrenti also on it. He had the latest chat with them, and he mentioned that this year they won't grow for sure. Once they get their new products online, once we've had the chance to do a due diligence on those and check what the performance is, then probably we can continue growing with them. But yeah, we don't have a clear indication on when this would happen. They list some, but clearly the book won't grow this year.
Mm. When we talk about ITF, they took over now the position as the biggest lender on the marketplace. Portfolio size currently 6.6 million. Two questions here on my end, or just like two observations from my end that you kindly can comment on. The first one is we saw a recent decline in interest rates. Now they're down to 11%, similar to some observations also in the market, but I would leave that up to you to
Yes.
assess.
So interest rates, that's something we can see pretty much happening on the market overall, as you mentioned as well. There seems to be quite a bit of liquidity at the moment coming from institutional investors, not just on income, but I mean overall that affects the pricings. So I mean if we just touch shortly, or I'll mention two examples, Hovi and Ibancar on the platform, they both seem to be overfunded at this point. By overfunded, it means that they have term sheets on the table more than they can deploy. So essentially, as always, P2P competes not just with other P2P platforms, but competes with actually institutional allocators. And that's just seems to be at the moment the market situation.
Then you mentioned already Ibancar, also one of the bigger lenders on income. Portfolio right now 3.5 million euro. And also here we got a little bit the same situation as with ITF. I feel like the last assets we've seen all had interest rates from maximum 9.5%. So we haven't touched the 10% barrier for quite some time now. I feel like it's at least 2 or 3 months now. How do you see their development, especially on income moving forward?
Well, as we don't talk with them, I think they are happy with the cooperation. They did use some other platforms, and they say that things work quite well comparatively. But as I mentioned, yeah, they have quite a bit of liquidity also available. So being overfunded means that then you need to drop the interest rates on where you can. And necessarily it's not a bad thing. I mean, obviously all the investors want to get the highest return they can, but if a company also has other funding sources and is not desperately, overbidding on P2P platforms, then obviously that's a good thing for stability. Shortly, well, one more thing. Beginning of next year, they said that they should be more active with us as well. So that was a comment from Lavrenti before when I spoke with him.
Okay. Where do you see the ceiling for them volume-wise next year then?
Well, if they're at around 3.5 million book at the moment, well, you always want me to anchor to something. What's the outlook? But very difficult to say. But I mean, I would be very happy if we are with most of the LOs at over 5 million. And I think like between 5 to 10, if with the current ones we would be able to get there, then that would be already very good.
How much confidence do you have in Virtus Lending to grow their portfolio even further, considering they are already, for me personally, quite surprisingly already at a 3 million portfolio with income, and considering they operate in, let's say, a little bit of a smaller market. I'm quite surprised how much volume they have picked up already this year on income. How do you see their development?
Well, I mean, overall, great progress. We had a good meeting in Tallinn with the CEO as well, and basically he was quite bullish on their growth plans, and they're also working on some other markets at the moment, which they would then like to list with us. So I think they will keep on growing, and it's I mean the guys seem to know what they're doing, considering it's ex-Mogo. So yeah, I mean, I would definitely say that I think they will keep on growing with us.
And then we got the Simpleros, the second lender to join Income quite recently. I think it was in September. Just starting to grow their portfolio on Income. I checked this morning, it's 170K right now. How do you assess their potential, and what maybe can you share about the conversations that you have with their team, with their management, and maybe just some insights, because the lender is still fairly new on the marketplace. What's your overall perception of them?
Well, I mean, we've known them for quite a long time. In that sense, I think I had the first discussion with them perhaps already in 23, maybe even 22. And by that time, we didn't get to a cooperation, mainly due to kind of like them being quite fresh and the plans of growth being a bit more vague. And now we reinitiated the discussion, and everything seemed to pan out in the due diligence part as well. Spain is a good market to be. It's not an easy market, but it's a good market, and we see a lot of companies having interest in it. So yeah, I think they will grow slowly, but more or less the same tempo as at the moment.
Okay. And then lastly, I would also like to address the most recent edition, which was communicated publicly just yesterday prior recording. Autofino, a new lender from Lithuania. What's your take on them? What did you like about their product, and why did you onboard them on the marketplace?
Yeah, it's similar to current. So we had some experience on their product as well. And we had quite a long discussion with them as well. And now things just panned out, and they passed the due diligence part, and we thought, okay, this makes sense. And perhaps they will be growing at around 100K per month, so nothing massive. But for a new lender, still quite okay.
Mhm. It seems like cars, the car business, car rental companies, this rent to buy products. It seems like this is a, should we call it a niche, or it's an investment area where Income seems to be quite exposed with their due diligence and also the profile of lenders. Is that a trend we can also see moving forward, or do
Yeah,
you go
I
also
don't.
maybe purchase lending, litigation companies? Do you see also some potential more in this area?
Well, I think like if we look at, you mentioned litigation, so Sandfield said that they should be increasing amounts in about 1 to 2 months. We see this is the only bullet repayment provider that we have, depending on when the litigation ends. They've grown in relatively short time to around 3 million, and the repayments are happening also quite well now. So the first bullet loans that they listed, they've started to mature, and repayments are flowing in as they should. But as an overall trend, we didn't really look at how can we get car companies or litigation loans. I think it's more driven by the fact that if you want to get European loan originators, or let's say from closer than from emerging markets, then it's quite hard to find direct lending anymore. So basically, all are they buy now, pay later? Are they car related? Are they litigation loans? It's kind of like fintech in Europe and surrounding areas seems to have moved to sort of other types of lending instead of direct cash loans. And I guess we're just following that trend, seeing what works, what doesn't work, and then yeah, making the decisions based on that. The due diligence, I mean, it's relatively same if you look at the loan book. I mean, it doesn't matter if it's tied to a car, if it's tied to a litigation or buy now, pay later. You would look at the performance of the payments anyway. So as long as there are payments that you can assess and a book that you can assess, then essentially you can apply the same principles.
Mm. That ties in very nicely with where I wanted to shift the conversation now, which is onboarding new lending companies. I was re-listening to the conversation that I had with Lavrenti at the beginning of the year, and he was setting out the target to have 6 lending companies, 6 new lending companies to be the target to join income this year. Now we have Virtus Lending, we got Simpleros, and recently Autofino. So you're halfway there, but with only 2 months to go. You explained a couple of reasons why you struggle to, probably find the right lending companies that are a suitable fit for income. What's the way moving forward? Also looking at the growth that income, of course, needs to become self-sufficient. How do you address this topic internally? How do you keep moving forward? Is it the emerging markets taking a little bit more risk, being a bit more, allowing a bit more risk, or like where does income go from here?
Well, emerging markets, obviously, I mean, we have a few in the pipeline, and there you can see the APR caps also coming, but generally there's direct lending still. And we have a few now in the pipeline from Indonesia as well that we're looking into, who are keen to grow. I guess overall, the question is that where do you find a reasonable sized LO that is not big enough yet, perhaps to get institutional funding in terms of tens of millions? Because if once your loan book is, I don't know, 30, 40, 50 million, then you'll have a lot of offers, especially in Europe or surrounding areas. I mean, from institutions. So then the kind of the competitiveness or the, how do I say, the added value of a P2P becomes more like a credit card to them that, okay, it's seasonal, we can list more when we need and so forth, but they no longer need P2P to solve a bigger overall funding issue. So for us, it's a balancing act to find that niche, the right correct size of companies who would maybe then need the 5 to 10 million. And in terms of risk, I think we don't really want to go loosening too much on the loan book side. The major question is always that, like, if we look at, I don't know, if we would look at Africa, or even if we look at other Asian nations, then the question always comes is like, what is the legal structure that needs to be in place? What's the local legislation? Can you trust it? Can you build it to work as good as it should? So there's a lot of considerations, but I think like if the loan book performance is bad, then generally that's a no-go for us. What we do, Yegor, from our sales team is connecting all the time with old and new loan originators and trying to pull them in to the due diligence process and then to onboard. But it is, of course, it takes time, and the overall liquidity situation in the market is that P2P is no longer the only source of lending, even for the smaller ones, and therefore we need to kind of try to get our offer competitive as well.
How do you see the current pipeline?
Pipeline is okay. I think we have those 2 Indonesian companies that we're talking to. On one of them, we're just finishing legal work. So I think that is probably doable still this year. And then there might be another one, but we're not sure yet on the full legal side of it. So I would say we'll probably add 1 or 2 this year, but yeah, maybe we don't make it to that 6.
Do you feel like, because we discussed the funding needs of the lending companies, do you feel like not just income specifically, but overall in the peer-to-peer market, investors need to be prepared to face lower interest rates also in 2026, and that let's say double-digit returns on peer-to-peer becomes increasingly more difficult to achieve?
Well, it's a question mark, right? So kind of like I said, we're not just competing on P2P or against other investors or however, as P2P investors, we're competing against institutional capital. And then it comes really to that question of what I've said here also a few times is that if they have other sources of funding, then obviously they will drop the interest rates on P2P to kind of about match that, right? So so as long as there is liquidity on the market for these lenders, then I would assume that the interest rates are what they are at this point. But yeah, it's a bit of a funny one, right? Because if you can get 8 to 9% on bonds already, then it comes a question is like, what is the role of P2P even in that sense? Um, and you also want good LOs, right? So you want the ones that would be able to issue bonds or attract institutional funding because they're lower risk. But then again, the trade-off is lower interest. So yeah, and I guess that's something we can see on all the platforms that interest rates are what they are at this point.
All right. Maybe to wrap up, I would like to address the crowdfunding round. From the outside perspective, might consider it was, let's say, an overseeable amount that you have attracted, aside from the commitment from the main shareholder. How
Yeah.
would you assess the success of the crowdfunding round in general?
Well, I think around 170, 180 came through that round. So maybe again, the added value of a crowdfunding round is also added visibility, a few articles here and there, which helps to drive investor growth. But obviously, I mean, we would have raised a little bit more if we could have. I think the minimum target we were thinking is 250. But yeah, I mean, crowdfunding also these days, not the same as it was in 22 or the early 22, 21, when everybody was a startup investor. Clearly, it's been also difficult for crowdfunding equity platforms. Uh, but I guess, I mean, it was a decent result, and we can be happy that we did it. And now we're looking also to still for a few other investors to hopefully join in.
Mm. To which extent do you feel like the crowdfunding result is limiting the ability of income to grow further, whether this is by fixing some IT bugs, improving the IT performance or the website performance as a whole, having additional resources to maybe have a better pace at sourcing new lending companies. So how much does the result now affect you, or maybe has a negative impact in terms of how income is can grow its position from here on onwards?
Well, I think like we have those few main things that we want to take a look at. Secondary market that has been promised for a long time, so that hopefully Labyrinth can push it through finally. Then we have some of these speed bugs or like the speed issues. We want to do a little bit of data work on getting the platform faster. And then there's a bunch of nice to have things, which I guess can wait as well. So I don't see from an IT side it limits us too much. The main things we get done. In terms of origination, the biggest thing there is the legal fee side, usually, like talking with different lawyers in different jurisdictions costs money. But there, I think to find good candidates is a bigger bottleneck than actually funding in itself. So I think we can relatively well execute now what we planned. But obviously, yes, would be nice to have 1 million or two or whatever to accelerate. But it is what it is, and scarcity creates innovation, as they say. So we'll just have to see what makes sense to build at this point and what not.
Hmm. And lastly, maybe from the shareholder perspective, and I'm sure there's also meetings that you have in a certain uh, frequency. What is the the current shareholder perspective on income? What are the discussions? Where do you want to leverage now your resources the most? What's on the agenda? And how do the shareholders want to keep going with the platform?
Well, I guess the main business is the main business. So exactly what we've been doing now. But then we have some thoughts on how can we service institutions as well, right? So not just, that institutions would invest through us, but also the technology that we've built now in the last few years. Is that something that we can offer as a service? Because I mean, if you think of the backbone of income platform or is the ledger system, right? So where all the loans, I think around 1 million loans have gone through it already. So it's quite robust. Around 200 million plus in euros has also gone through the system. And we haven't noticed any deviations from what it should be. So kind of like looking at what is the technology we have and is there a way to make it into a product? But that's quite early on. We're still collecting some market feedback from some institutional investors and then see what we can do with it. But other than that, I guess, business as usual. In that sense, our main goal is to raise the AUM to the level, as you mentioned, to be self-sufficient. We're not that far. And if Danarupiah hadn't, if and if always dropped, then we'd be far closer to it. So, but it is what it is in business. So that's how, I guess, those are the main things. Some new ideas, some new directions, but mainly it's business as usual.
All right, good. Then I would say we can really wrap it up now at this point. Maybe any last comments from your end before we finish?
I guess not. Try jujitsu. It's awesome. And follow me on my LinkedIn and X. And I guess that's about it. Yeah. And have a awesome end of the year to everyone.
All right. And maybe there will be a point where we see each other again. Maybe we line up a Q&A session in the upcoming months. For sure, we have Lavrenti back on the episode and maybe a couple of lender features as well. So hopefully we will remain in a better frequency now moving forward with the Income Podcast. As for now, Kimmo, thanks a lot for your time, for sharing some insights and answers regarding business development on income. Best of luck moving forward. And if there are any questions from the investor community, of course, feel free to drop it below the video on YouTube, but you can also comment in the Telegram chat on income, where usually there's always representatives being very active to respond. So if you have any immediate requests, you can also reach out there. All right, Kimmo, thanks again for your time, and we catch up then in one of the next episodes.
All right. Thank you.